Hey guys, welcome back to the channel. Today I'm going to be analyzing the drawdowns on the S&P 500 index. In this video, I'll be taking the top 100 drawdowns for this index. I'm going to add the 1-year performance after the recovery and also the correlation between the historical drawdowns alongside our current drawdown. Now you can do this for any stock that you want, but I figured that the S&P 500 was a good start. So we're going to require some packages here. I'm going to get the historical data from Yahoo Finance. And this data goes back to 1927. I'm going to calculate the returns on the close. Next, I'll be getting the table of the top 100 drawdowns on this index. Let's take a look at that table. This table is sorted by def, so the worst ones should be at the top. And we're currently sitting on the 15th position with a current drawdown of approximately 19%. So now I'm going to add a column to this table and see how they performed 1 year after the recovery. So let's go back to our script. So I'm going to go ahead and add that column and add the performance. Now let's take a look at the table. So what I wanted to highlight here was that 1 year after the recovery, for the most part, we do see positive returns, with the exception of this third drawdown, which lasted from March of 2000 until May of 2007. And for the most part, the returns are pretty good. Not to add that if one buys during the recovery, the returns might be slightly higher, since you're buying as this index recovers. The thing is, we might not know when we're going through that recovery period. And to see how our current drawdown compares to all others, I decided to plot our current drawdown compared to the historical drawdowns as they reach this terminal depth point. So let's go ahead and plot these. So it'll go from the start to the trough. So we'll go ahead and plot the very first instance, and then I'm going to be adding the rest, and then I'm going to highlight the current drawdown. So let's take a look at that plot. So as you see from this red line, which is our current drawdown, it's staying within the boundaries of the historical drawdowns. So we're not seeing anything out of the ordinary. But I do want to compare this current drawdown to the historical ones using correlation to see if we can find any high correlation between our historical drawdowns. So that's what I'll be doing next. So let's add a column for correlation. I'm going to add the correlation between historical drawdowns and our current drawdown. And let's take a look at that table. So I do not see any strong correlation between our current drawdown with those that are worse than our current drawdown. But if there's one, it would have to be this fourth instance, which has a correlation of 69, which is not that high. But let's plot them against each other to see what they look like. So let's take a look at that plot. So this one is showing a 70% correlation, but as time goes by, we need to monitor and see if it's keeping track. And if this correlation is increasing, it might have a similar path to this one. It's not concrete yet, but as of now, you can see that it's tracking this movement, but it's not perfect. Now let's try and see if we can find a correlation that's higher than this one using the other drawdowns that have not been as bad as this current one. So let's close this out. So here I'm going to subset the table for which the terminal point is higher or equal to our current drawdown. Let's take a look at that table. So it only returned 14 entries, and I'm gauging these by the number of days to hit the trough. So as you see from this table, all the other instances were greater than or equal to our current drawdown to the trough. And at a glance, it looks like the one right below it has a higher correlation of around 80%. So let's go ahead and plot this against our current drawdown. So I'm going to run this block. Now let's take a look at this plot. Alright, so as you can see, when comparing these two, they seem to be tracking, but it doesn't have that perfect correlation, at least not yet. But it will be interesting to see how this correlation changes through time, since it looks like this previous drawdown is continuous but not extreme, and finally hitting its lowest point after approximately 200 days. Well guys, this concludes the video. I'll leave a link down in the description area where you can find this code. Please subscribe to the channel if you haven't done so already. Thank you so much for watching, and I'll see you guys in the next video.